wabarakatuh. In this presentation, I will be talking about the Mexican financial crisis of 1994 and 1995. My name is Mohammed Ahmed Hussein. So, in the content of the presentation, first of all, we will be talking about the background of the crisis. Then we will be talking about the reasons of the crisis, which are trade liberalization of capital flows, and currency devaluation. And then we'll be talking about the effects of the crisis in general and the effects of the crisis in financial market. And lastly, we'll be talking about the solutions for the crisis. So the background of the crisis: since 1930 or the Great Depression, the Mexican government followed the strategy of import substitution industrialization, uh, which under this model the Mexican government instituted serious policies and regulation to protect its domestic industries from international competition. Uh, but this development or this model ran into trouble in 1970 and 1980. So after that, the Mexican government undertook economic reform and deregulation of its economy in the second half of 1980s. So the Mexican economy seemed healthy in early of 90s because there was foreign investment and there was the inflation was low and the central bank had billions in reserve. So we can say that the economic crisis in Mexico, or the currency crisis in Mexico, in 1994 and 1995, became an effective crisis after the devaluation of the Mexican peso in December 1994. So the reasons of the financial crisis. The first reason we can say trade liberalization, which President Miquel de la Madrid in 1982 and 1988 had decided to liberalize the trade and international capital flows, which include a reduction of the trade barriers, and also the restrictions on foreign investment in many sectors were lifted. So in 1988, under President Salinas, he also continued to liberalize uh, the trade, which the government negotiated with the North America Free Trade Agreement with the United States and Canada. Under this negotiation, the government lowered tariffs even below the level required, opened the country to foreign direct investment in many sectors. So at this moment, the balance of payment at that time were in crisis. The second reason why the financial crisis happened in Mexico in 1994 is liberalization of capital flows. In 1989, Mexican companies or banks are allowed to start borrowing in the financial markets abroad because the government had the Investment Act that allow a greater freedom for foreigners to invest the Mexican stock exchange. The reforms of these reforms or liberalization affected the Mexican balance of payment, and the liberalization of the financial account allowed money to flow freely in and out of Mexico. So in here we can see Mexico balance of payment in 1988 and 1994, and we can see that the trade balance had the worst in 1994. So there was a balance of payment crisis at that time in the middle of the crisis of the 1994. So the third reason uh, of the financial crisis in Mexico is the currency devaluation. Uh, the Mexico or the central bank in Mexico devaluated the currency for peso between 13 and 15% in 1994 and 1997 after the currency depreciated from about 3.3 peso per $1 and to over 10 pesos per dollar. and it was the worst banking crisis at that time. So we can say that the effects of the financial crisis in general, after devaluation or depreciation of the currency or peso in Mexico economy started to rebalance. Uh, we can see that the Mexico economy reduced 10% in the first half of the year. Uh, the current account deficit declined from 95.8% in 1994 to 0.5% in 1995. At that time, the unemployment rate rose from 3.7% in 1994 to 6.2% in 1995. And the GDP fall to 6% in 1990, between 1994 and 1995, as we can see from the diagram. So there was inflation as well during the devaluation of the peso. Goods and services from abroad became more expensive, pushing inflation. So we can say that Mexico experienced a credit boom or lending boom, and the inflation exceeded the United States and United States Mexico main trading partner. Mexico took years for the inflation to be acceptable level. The reforms in financial sector or financial market. The government of Mexico, they nationalized it, almost the private banks in 1982, and then they privatized it, them again in 1991 and 1992. So in this, the regulation of the finance facilitated the entry of foreign capital. There was a major boom in the country's stock market and large increase in foreign direct investment in the country. Uh, there was an inexperienced regulator in monitoring the banks. Depositors at this time, the regulator has a weak monitoring, and the depositors has no incentive to monitor the banks as the Mexican government guaranteed both deposits and liability. So the impact of the financial crisis in on financial market after privatization of the banks, Mexico experienced a major lending boom because all the banks they compete, they want to try and gain more market share to earn back their investment. So at this time or at that time, the total loans as percent of GDP rose from 24% in 1991 to 38% in 1994, and the other loans to the private sector uh, went from 20% to the 30% of the GDP. So, what we can see the problem is in the bank privatization because the bank privatization failed because the incentive of the government. The government wanted to maximize price. Investors paid for privatized banks, and the government they give the privilege to the win investors only. So there was a lack of competitiveness. Competitive. So a binding process did not take into account buyers' experience in the banking sector. So there was a little hands-on experience running commercial banks. So the government also delayed adoption of the financial banking and allowed banks to lend or buy securities. So there was so many problems with the bank privatization. Solutions for the crisis. Uh, the IMF announced in January 1995 USD 7 billion because this was the worst banking or worst crisis in Mexico in 1994. So at that time, the President of the United States, Bill Clinton, and Treasury Department arranged a large scale of loan, standby loan for the Mexico and helped them. So there was a credit line of 50 billion. U.S. Treasury provided 20 billion. IMF also provided 18 billion, which includes the 7 billion, 7.8 billion that they already paid in January 1995, and the Bank for International settlements 10 billion and private lines 3 billion. And the Mexican government they only used 13 billion from the US Treasury, and they paid back very quickly at the time. That's all. Thank you.